All right, welcome everybody. We're joined by Andrew Fienberg from Cross Country Mortgage here in Rochester. His partner Majua will be joining us as well. We really wanted to make this a focus again. I know we've touched on it in a number of different ways, but ultimately, interest rates aren't coming down drastically
No,
anytime soon.
no.
Um,
We talked about it the other day of we're probably not going to see six until the end of 2026.
yep,
So
that's like low six, like 6%,
yeah,
right?
yeah,
So you've got, you can plan on the next year and a half being in a similar, dynamic of just this mid to high six ranges, right? So it's now the good news is we've been, I mean, what, 2022 and this started to spike, right? So we're
right.
going on 4 years.
It's been a long time, and I think buyers at this point, I would think that a lot of the agents would agree, is buyers aren't afraid of rates anymore. They want homes, they want to move. We just have to make sure that they're comfortable with where the monthly payment's at and that they're able to get into the house they want.
So all that to say, like, buyers are still transacting,
Yeah,
homes are still selling. Yes, the rhetoric is out there that we're still at the bottom of the barrel in terms of, total number of home sales.
yeah,
But uh, I'm rambling to say, like, if there's a will, there's a way.
correct.
And this topic today, this time that we'll spend today is basically on the way, right? And how to get more strategic and tactical and start really with the concepts and an understanding of them. But the discussion we had the other day when we did this was like it was conceptual and then bringing it into actual use for your business, right?
Right. There's a lot of business out there that's being left on the table because of it.
Yeah, and that's how I want you to kind of have the perspective today is to be able to take one concept to be able to go out and implement it. And I'll start with this to make sure that you have a lending partner that is up to date on the strategies that you need to be up to date on, and to take it a step further to where that partnership shouldn't require you to like have all the know-how and just the details and the specifics, right?
No, it's
Like
not
there
their
needs to
job.
be leverage.
Yes.
And somebody like Drew here is just that.
No,
And
thank you.
he'll tell you like have multiple.
Yeah. Yeah. I'm not looking to be everyone's first choice, but I'm definitely there for an option. And when there's different scenarios of people struggling and maybe getting told no, you should have multiple lenders in your back pocket to be able to run the scenarios by to make sure that no one's missing something. That's the biggest thing. Don't leave any business on the table. You want to crush this year, crush the rest of this year, get crushing into next year's pipeline, and making sure that your buyers are ready to go.
Love it. Now where I'll just offer one more like agent perspective for me and then really turn it over to you guys. Um, you know, you have to be able to get it to a point where you have a lead, you have somebody who's contacting you, you have somebody who says they're interested in buying, selling, and need to buy, whatever it is, right? You have to get it to a point where the trust and rapport and the fact finding, the needs analysis, you've consulted at a level where, you know that it is possible for them to reach their goals. So that involves knowing their goals, that involves a certain level of knowing as much as you can about them. And I always refer to it as a who, what, where, when, why, how. Like you should be filling in those blanks with each person. And, to be able to get to a point where like this is all possible and there's some financial stuff we got to figure out, and then it's a transition or a introduction to the partnership for the overall experience that you're leading them on as an agent to somebody like Drew and Madro.
Right.
All right, PowerPoint. So where do we start, Joe?
Yeah, I mean, I think the first thing is really just learning how to talk with your buyers, making sure that you know where they want to feel, making sure they're comfortable, but making sure you know their goals so that when you refer them over to a lender, that you may know, okay, listen, this buyer, they're feeling that they want to be comfortable at a $2,000 a month payment. They've got X amount of saved. Now, some buyers may not want to get too into finances with you, which is fine, but at least get to know them to the point where when you send them over to us or send them over to any lender, that you know their goals. That way the communication with us and you guys and them is all on the right from the beginning is on the same page. So making sure you guys do that, I would think that would be fair.
And I'll step in here to say, like, make sure, it's our role, and not taking anything away from you, Drew, but like you as an agent, you want to be the leader here,
100%.
right? So like you want to make sure that you have that awareness and you're not just turning it over to somebody like Drew to do all this digging. And then the client feels like, well, yeah, my agent didn't ask me those questions.
Yeah, you want to make sure that they're comfortable with you. I mean, they are to an extent where they're signing your guys' agreement to begin with, but you guys need to get deeper into, okay, let's get you into a transaction. And from the beginning, we know that we're all on the same page. I think that's the biggest thing.
A lot of you have heard this from me a million times at this point, but my like how I think of how to approach a financial aspect of consulting on our end as agents and how to know that your the qualification aspect of our business when it comes to the financial part. I like to break it down into two questions, two topics. What are you comfortable with spending per month? And not asking your life savings, but what are you comfortable bringing to the table in terms of cash to go towards a down payment and closing costs?
That's
Once you
perfect way to
have
put it.
that and you know that's realistic, because that's a qualifying part on your end. Because if somebody's telling you I want to buy a $500,000 home in Penfield, and they tell you that they want to do that by spending $1,500 a month and they have $7,000 to work with, we know
That's
they're
not
not
gonna
doing a they're not buying a $500,000 home in Penfield with that. So just handing that situation over to Drew, well, one, it becomes unfair to him.
it creates an issue because then they think that I'm
Little
not
bit
doing
of an
my
issue.
job correctly.
But more practically speaking, now you're taking the difficult conversation that you could, ultimately, um, and it's not that somebody like Drew can't help with it, right? But
No.
it's just like you have the ability to lead and set the expectations and really, you know, cement yourself as their trusted advisor, as their representative.
Right. I think Majua said it the other day that I forget the percentage, it was very high that it was almost 60 or 70% of buyers that come to us don't have financial advisors. So when they get sent to us and even you guys, we're protecting them on probably their biggest purchase to date of their lives in most cases. We have to look out for them, make sure that they feel comfortable and that they are able and ready to do so. That's how I look at it.
I miss that. Can you 60 to 70% of incoming, people into your guys' world and you dive into financial stuff don't have financial advisors.
Yeah, they don't. They don't know. They're coming to us as a blank canvas. They're not sure what they can afford, how much they need saved. They don't know about any different programs, any down payment assistant programs, or different low down payment mortgage options, or everyone's afraid of PMI. They're not sure of how much PMI even costs if they're not putting 20% down. There's so much that they don't know, and they're on the finance side, they're lost. So we have to just make sure that when we're dealing with them, that we put them in the right direction.
All right, so this is off script,
Yeah.
okay? But here's the first concept of the day for you to implement as an agent. Understand that dynamic that 60 to 70% of the population out there does not have professional guidance when it comes to their financial life. And I'm not telling you to go out and be that person.
No,
I'm
but
telling you to be the conduit and the partner. Think of it as an accountability partnership for as many people as you can in your life to where you're making the connection to, you know, their wealth building to somebody that can help them with it, or just their, you know, their financial path, you know, to get to a point of wealth. If you know, it needs to be, you know, you always got to have a starting point, right? If you're making these connections, and ultimately the tool for this is the organization chart that you have for your business, because you need a partner in your organization chart like Drew. As a lender, you need an attorney, you need a home inspector, you need all the obvious things that come with a transaction. A financial advisor, an accountant is less obvious because you don't, it's not a requirement to transact on our end. But if you're the one that has the connections in the community to the people that you trust, that's a value point that you can offer.
Huge value point. And you'll get referral if you say you start talking, and this is way off of topic here, but say you start talking with some financial advisors on how they can help, you just give them a lead. If you bring it up somehow in your transaction, and your buyers may say, "Oh, I've always wanted to talk with a financial advisor." If you have that person and you send them over to someone, that financial advisor is going to think of you all the time.
Right.
I get tons of business from financial advisors. They are great partners to have, whether you use them a lot or not. It should be something on your mind to have as one of those people in your back pocket if someone needs something from you.
Yeah. And take that step further with just that's how business is done, right?
Right.
Like,
The
but
only
as
people.
business owners, you're going to respect another business owner who's helping you grow your business.
Right.
So look at your database and find the business owners and really segment it and prioritize it. Rayco, go ahead, brother.
Hey, good morning. Can we ask some questions?
Yep.
Okay, I have three questions. I don't know if there are too many, but the first is um how can you before the buyer goes to the lender to ask for a pre-qualification, how can we what question to tell the buyer to ask that lender before
Dude,
they goes
the
to
two,
them,
I'm
you
going to
know?
cut you off just so we stay on track, not to be rude, but the
Okay.
two questions I just laid out of what do you want to spend per month and how much do you have saved to go towards a purchase? That's how you need to think of it. You need to get that information, because then it's okay. I want you to take that to your lender and I want you to tell them that. And if you don't know that, then you need to like first kind of sit down, like do a family exercise, you know, figure out the life budget, right? And come back to me if you know, let's talk about it. But get to a point where you know your monthly budget that you're comfortable with, and you know the cash that you want to bring to the table. Now I'm going to send you to the lender to get through the details. Most agents are going to do the opposite. Oh, great, you want to buy a house? You haven't gotten approved yet? Go talk to the lender. Let
Here's
me
the
know how
lender.
it goes. There's a
So
difference
can
in
I interrupt with that?
sure.
Mhm.
So typically, and tell me if I'm wrong, not typically, but for those that they really don't understand, you know, they say, I just want to my payments to be equal to or less than what I'm paying in rent, and their rent could be 2,400 or less.
Mhm.
So I typically say, go to the lender, give them all your information, come up with a prequal letter. Your prequel letter should look like a resume at this point, and I explain why it needs to look like a resume. And then once you get that prequel letter, then what I'm going to do is keep you below budget. I'm going to take a look at the taxes to make sure you stay below budget. Don't cap on the prequal letter. Go to your far limit. Just because you can afford a million doesn't mean you have to spend a million.
Yep.
And so I do that approach because sometimes I get a pre-qual letter, you know, they want a house for 150,000. Well, I'm not going to show them any houses. But if they qualify for 400, but they still want something in the 200 range, well, that at least I know what I'm working with.
Yeah,
I-
I mean, and I guess the approach that I take is to get deeper in with them and to get
Mhm.
involved, and it's also a qualifying thing on your end, right? To because just you know, for example, like you mentioned the monthly rent, right? And staying there, like if you know what that rent is and know the general type of home and location and price point that they're going to be looking at, this becomes an easy correlation for you as an agent, right? To where it's like, okay, these numbers and what they're telling me they want and where they want to be and how the numbers translate. Like you have to have that knowledge, right? Because again, if somebody's looking to buy $500,000 home and they're telling you they want to be $1,500 a month, the taxes would be that alone, most likely, right? So it's just understanding whether or not you have a qualified lead, because if that's not the case, there needs to be a follow-up conversation to where it's like, look at, we gotta kind of dive into this a little further, because that $2,400 a month rent payment that you have with the home that you're telling me you want, and the area and the style and the size and the amenities and everything, like my fear is that that's going to be a lot more expensive per month unless we're getting a significant down payment involved.
Right.
And again, there is let's get with a lender to really get the details.
Right.
My point is, you want to be in a position to, provide value in this process.
Is there anyone on this call who does a buyer consultation with a lender?
Ooh,
I
like that.
do. I
Do you?
do. So I
I
just
do as
wanted
well.
to share a little bit about this, which leads me, and Andrew, thank you for that.
No problem.
Something that I do and that I've done just recently, and I do this every time we go through, like 2020, we did this, 2023. So every 2 or 3 years, we're updating this. Could be every year if we need, but I've just updated my buyer's questionnaire. So in my process of when I work with people, I do a Google Forms buyer's questionnaire, and I actually go through a financial wellness analysis with them. Want to know what their dreams and goals are outside of buying a house, right? Because that's going to dictate, some movement too. So I like to talk, first time home buyers, second time home buyers, investors. They're all different. So I have a different questionnaire for my investors. And then I take that questionnaire when they finish it, that's step one, and I send that to my loan officer. And then me and my loan officer discuss it and we strategize together. Because
That's
I don't
awesome.
want my loan officer, like I want to be a part of the play, but we play our roles. Right. And so I like to set my loan officer up where we speak to our clients way more than our loan officer does. Well, depends on where you are in the process.
Right.
But I try to make sure that my lender is right up to date. Hey, this is what I'm thinking. This is a strategy I'm thinking. Do you think that that's feasible? Have you seen other strategies like this in the market? So like right off the bat, we have our lenders in mind that we're going to send out, but it's
Right.
like, where does the process fall? Is it the same for each one? And then shift into even for real estate investing. You have a lot of people that are willing to throw their money out there. Well, hey, let me bring this to my lender. Can you talk to my cash investor about pros and cons for mortgages? Right? I don't play that role. I put it on my lender to play
That's
that
smart.
role for them. So
Yeah.
I do it piece by piece. Sometimes I have my lender meet me in person. I've been doing a lot more in person.
In person's killing it right now. In
Yeah,
person is the way to go. It started obviously during COVID, that started to go away, especially for us on the lending side, the walk-ins to the office and whatnot. I used to meet with every single buyer in person. And then that kind of stopped due to COVID, but myself and other loan officers in our branch, we're all starting to get back to that pretty heavily, and it's game changing. You see less shopping, you see more comfortability. They leave happier, and then just a phone call, send an app. That needs to go away. I think the in person is huge.
Love it. Yeah, I mean, I think we're on the overall topic right now of the experience,
Yeah,
right?
that's
And
the
like
biggest thing.
I'm the in-person element and that what Nicole mentioned, like, and what I'm mentioning is all like for the experience you're providing as the professionals that they're hiring, and making sure that A, you convert based on how you go about this, but B, it's a remarkable experience, right? And that they're going to remark and leave you a review afterwards.
Right. And and to segue into that, the experience and the review comes down. I think this is a good place to segue into the lender that you're sending your business to, making sure that they're talking about different creative mortgage solutions in this higher rate market in order to make your experience for your buyer as great as possible.
For sure.
There's a few different things I guess I can get kind of into different products here if you would like, Jason.
Yeah. Go ahead. Let's start trying to think what the next slide.
There's a few things at Cross Country Mortgage right now where we have, when we're looking at these higher rates, and a lot of buyers have been sitting on the sideline because maybe they can't afford what they truly want, or if they want to upgrade a house, or even if it's a brand new home to them, first time home buyer, what they see in their head of what they want, but they can't afford it at the higher rates. Does anyone know anything about temporary rate buy downs at all? And some institutions have them, some don't. So you may not even work with a loan officer who can provide them. Does anyone understand what those are, or have an idea of what they are?
Treat me like a golden retriever.
Yep. So we have at Cross Country, we have what's called a temporary rate buy down option. So this is for, there's a few different options, a 3-2-1, a 2-1, and a 1-0 option. Now what that means is that for the first few years of the mortgage, it's on say a 30-year fixed. On the first few years, that mortgage rate is going to be less, typically 1%, depending on how many years you go back. Say for the 3-2-1, for the first year, it's gonna be 3% less. Second year, it's gonna be 2% less. Third year, it's gonna be 1% less than the initial rate of where they locked in and when they purchased the home. And then after that, it goes back to that standard rate. And that, again, that can be up to a 3-year, a 2-year, or a 1-year, depending on the situation. We go over all the different options for those buyers. Especially in this market, we're not sure when rates are truly going to drop. The most popular one, I think, right now is a 2-1 buy down. Give it 2 years, a little bit lower of a rate, and then goes back, and hopefully we can refinance at that point.
What's the describe the typical buyer, I guess, that would be drawn to this type of product? Like what objection are they usually providing first to where this would be the handler, right? Or
I mean, the biggest thing is going to be monthly payment. When you have those buyers who are very concerned about where they want their monthly payment, or may feel a little bit on the edge, on the fence of wanting to buy because maybe they're at a $2,500 a month payment and they can do it, they can qualify, but they may not feel as comfortable in this economy really going that high right now. They would rather be maybe around a $2,000 a month payment, or a little bit less than say a $2,500, whatever it may be. And that could make them say, okay, I'm on the fence, changing them to an answer of, I'm ready to go now, let's do this. That's the kind of buyer that this program would work out great for.
So for us to be triggered with there's a hurdle on finding a fit for monthly payment numbers that they're comfortable with, and then to think of this type of strategy and be able to present, to this buyer, okay, look at, I think what we should do is reconnect with the lender and have them talk to you about, potential rate buy down options to see if we can find a fit for that monthly payment priority that you have, rightfully so. And look at the alternatives and the options available to make that a fit while getting creative. Would that be a fair
Yes.
script, so to speak?
Yeah, and when you go to your buyers, and if you have a buyer that is on the fence like this situation, and you have in the back of your head, well, what if I can get you a lower rate temporarily? Now you don't need to know the ins and outs. That's my job. But for you guys to know, well, this might be an option if you're on the fence, and we've ran head loan estimates, ran at the set rate right now, say it's 6.875 or 7%, wherever they're at right now. And you're just not feeling that monthly payment. Well, what if I can get it down to 5 right now for you?
Hey, Drew,
Would
can I
that
ask
work?
a question?
Yeah.
This is Heather from Gateway.
Hi, Heather. How you doing?
How are you? Good, thank you. So with respect to this program, I'm not familiar with it, but I'm curious as to, with doing this, does the buyer have to qualify for the latter part of the payment when this rate,
Yes.
lower rate expires, number
Great
one?
question.
And then number two is, what is the cost associated with that to the buyer at closing?
Mhm.
And then I'm assuming that would be rolled into closing costs.
Great questions. Yes, they do have to qualify with the higher payment where the today's rate would be at.
Okay.
The second question, how it gets paid or what the cost is. So there's an analysis breakdown of it. I can kind of get into a little bit, but it's nothing that you guys really need to worry about, but you take the difference of the interest. So say you're going from 7% to 5%, whatever the monthly payment, the principal and interest, the monthly payment is, whatever the difference. So say you're going from $1,700 to $1,500 a month, you have $200, multiply that by 12 months for that first year, that total cost for that first year, put that there. Say the second year is a difference of $100 a month, multiply that by 12, that total cost of the difference of principal and interest, that's over the amount of the years, whether it's a 3-2-1, a 2-1, or just a 1 year, that cost is what's going to be added on to get those lower rates. Now, the cool thing is that that cost can be paid by a seller concession.
Okay. What would be the benefit to doing this versus buying a point at closing?
It's all depending on what the person's situation is, because that we obviously buying down points permanently over a 30-year could make sense as well. It all depends on the borrower's thought of how long they're going to stay in the house for. Does the math make sense? A lot of permanent rate buy downs can be more expensive and to get less of a rate. So it may not make more sense, even though it help interest wise. If they're going to keep that loan for say the full 30 years, okay then. But typically no one's keeping that initial loan for 30 years, especially if we're hopefully going to see rates come down in the next, I don't know, year or two. They're going to refinance anyways. A temporary maybe make more sense.
Gotcha. Perfect.
Yeah.
Thank you so much.
No problem. Jason, where
What
do you
would
want to
you-
segue? Yeah.
So I guess to have a practical conversation before we wrap up that topic of the rate buy downs, because this is what we get faced with, right? Is when you're not there with us, when you're not on the phone, when it's not a conference, and I love that idea. Everybody like get a loan officer partner that is willing to do that with you, right? If you don't, you have a problem. But if we're alone at it in the conversation, which is most common, and we make a recommendation like this, we'll typically get in return like, okay, well, sounds great. What's the catch? What's the cost? What would you tell us to kind of respond with there? Because we don't want to get everything. I didn't even bother listening to everything you said because it's like,
Right. I mean,
I don't want to know, frankly.
all you need to know is that when you're meeting with that buyer, or maybe you've had the buyer for months and it's just not really going anywhere, they're not feeling comfortable, just having in the back of your head, knowing that you have an option to be able to say, well, let's try to fix this a different way that maybe the current loan officer can't deal with, because again, the rate buy downs aren't available everywhere, or maybe they haven't thought of it. Let's get a second opinion. Let's just have that in the back of your head. You don't need to know too much detail on it, but just having that potential solution knowledge to get over to us. That's the biggest thing.
Fair. So just kind of more of a deflective approach is the best way to
Correct.
do it, right? Like just
Right.
like, hey, I don't want to throw anything out there in terms of costs.
Right.
And
Don't.
let's go backwards if I'm wrong.
Right. You don't have to feel like it's going to, don't have the idea of this is going to work, but just have that idea of this could
But-
possibly work. But I'm not going to get into numbers with you. Let Drew run the numbers for you. Let's see if we can make something else work.
Totally fair. Totally
Yeah.
fair. Cool.
Yeah.
All right. Any questions on buy down strategies? So again, concept, buy or write down to fit a monthly payment. You know who you're talking to where that comes into play. Implementation becomes, hey, we have lenders that have products that allow you to get a cheaper rate to get your payment down to where you want, and the intention be to refinance at some point.
Yeah.
I have one last question. I'm so sorry.
Okay.
Is there a qualification factor with credit score?
No,
Okay, thank you.
no. These can happen on all types of loans, whether it's FHA, VA, conventional.
Awesome, thank
Yep.
The other thing I want you to be thinking of as you hear these concepts and strategies is, sure, when it's right in front of you, somebody that you're talking to use them, but think of your pipeline. Think of the leads that haven't converted into your pipeline. Think of, how you can, educate your entire database with these types of this type of information, right? And be a resource to them. I'm not telling you cold call your database with somebody that has not expressed any need to buy or sell a home and ask them if they'd be interested in figuring out how to buy a home with a rate buy down strategy. That's not it.
Right.
But to be
And
able to use this tactically to the benefit of producing opportunities for your business, it's possible.
Right. And one thing to go off of this, I know I mentioned, so the cost of this can be paid by a seller concession. There's kind of a thing out there in today's market of, if you're asking for concessions, you're not going to get accepted. That's so wrong. I get accepted offers all the time with seller concessions. The seller's still netting out exactly what they want to net out. The price goes up for that seller concession. When you tell your buyer, or when we have the conversations, you guys have the conversations with the listing agent. I will also have the conversation with the listing agent as I call on every single deal. When you are telling them, hey, these concessions aren't just my buyer has cash, but it's going to help them pay down on the rate to make them feel more comfortable. But your seller is still netting out exactly what they would net out anyways. Just have it that way. Concessions are not a bad thing. And listing agents and sellers will allow them. You just have to ask for them, and don't listen to the nonsense of, oh, we need every contingency removed. We can't ask the sellers for anything. It's such a seller's market right now. Yes and no. Just You have to be strategic on how to win in this market.
Well, this is a conversation now more than ever, at least in the last 4, 5, 6, 7 years sake, right?
Yeah.
So like it's
100%.
definitely a thing. I want to go back on my soapbox here for the agent mentality. What I mentioned there about like taking this and bringing it to everybody. Who's taking what they're learning today and writing a blog on it to post on your website, to post on your social media, to post in the newsletter that goes out to your database, to procure these types of conversations? Because that's the type of value that stands out and is authentic and is different than everybody else. When you're providing solutions to problems in the market, you're standing out as the primary resource. When you're taking a problem like rates are high, they're not coming down, and offering some context and perspective as to what a solution is, you're now the agent that stands out in their mind.
Yeah.
Back to you, Drew. What's
Yeah.
next?
Going off of that, different types of programs out there for and not really kind of going away from the higher rate discussion, but just different products out there to help you win and to get more accepted offers. We have tons of portfolio products at Cross Country Mortgage, especially for self-employed borrowers. Those types of borrowers who may have the income, but when they're filing their taxes, they're writing off a lot and not showing as much as they should be, which is perfectly fine. Who wants to give good old Uncle Sam everything. But we have all had those buyers that say they make $100,000 a year and then they're showing 20,000 on their tax returns, and then every loan officer is looking at it, laughing at them and saying, hey, we can't get you to approve for anything right now. We have different programs such as bank statement loans, asset statement loans, 1099 loans, profit and loss loans. There's so many different types of products out there that we hold portfolio. There are our programs that we have created, our own guidelines. We don't have to follow Freddie and Fannie. We make tons of exceptions on these programs, whether they meet all our guidelines or not, to help these buyers who, yes, they can make that payment, but they're not on paper showing that they can. We have the programs to help that solution and get them into homes that they want.
I think portfolio gets thrown out a lot with not a lot of understanding tied to it. And I think the concept for that really, like, the way to think of it that I drove home on my end was it's like a private product. It's unique to that lender. It's something they're willing to do at a custom level that they can, make happen. Right.
Thinking out, it's a
Bullets of
thinking out of the
strengths.
box.
Yeah.
It's a thinking out of the box solution program to help the buyers who need that and can't be in the conforming Freddie and Fannie guidelines.
So you should be thinking of this as an agent as the lenders that I work with, and let's just say there's 3 of them. I would be calling each of them to ask them about their portfolio products.
100%.
Because if you go 0 for 3, we're like, we don't really do that. Like, that's fine. I'm not telling you that they should be dead to you, but just understand they're more of a conforming bank type of lending institution.
There's more red
Doesn't
tape.
have the creativity to get creative with a certain segment of your pipeline and database.
Also, a lot of agents come to us when they hear portfolio or that we have portfolio, and that with me saying, hey, when there's another lender turning them down, we can probably help. This isn't for the buyer who has really bad credit, has no cash saved up. It's not that type of portfolio. They have to be strong in their own ways. For an example, asset qualifier loan. I'm doing one currently right now with a guy who is moving from California to Canandaigua, be closer to family. He's retiring. He's also self-employed. I don't know if anyone's had a self-employed borrower who was moving from state to state. That's very difficult because the Freddie and Fannie guidelines look at it as, well, their business is in this area. Are they going to be able to produce the same type of income in this area? Where you run into issues in that case. Well, this guy is also, again, he's getting close to retirement. He did well. He's got a ton of money saved up in his retirement accounts. We're able to we don't even ask for his tax returns. We're not asking for any retirement documentation. All we're getting is his IRA documentation and his 401k documentation that is showing that he's got a little over $2 million saved up. We're simply using his assets to just qualify him for the $500,000 house he's purchasing in Canandaigua now. It's so simple, as there's no other documentation. I sent it up for pre-approval review with the few documents that he had to provide to me, just his asset statements, got fully underwritten, pre-approved, got the accepted offer. We're waiting for title and appraisal to come back and we can close. It'll be closed within 20 days.
Love it.
So it's simple thinking lending.
Yeah. What I'm drawn to with this is the concept of, taking, again, a segment of your database, right? That may be business owners themselves, maybe retirees and don't have the steady income that they had coming in, and understanding that, there's a product for you as well.
Yep.
And it does, I think there could be some certain default types of settings out there with some agents that, like, oh, you haven't been self-employed for 2 years and you're done, and you're screwed, without exploring options. And I guess my point is just to, like, you hear business owner, like, think portfolio and specialized and customized, and make sure you have the lender that is going to be able to, best suit them. Because just sending them to whatever, big box, lender that only does things a certain ways may not work for them, even though they very well could be wildly successful.
Jason, we have, like I said, a 1099 program. Agents love this. You guys are 1099. I've actually done a few loans for different colleagues of yours. You guys also may write off tons of stuff and not show. You might get that 1099 at the end of the year that gets sent out that shows a lot more income that's showing than on your tax returns. Perfectly fine. We would collect we wouldn't even collect your tax returns. We collect the past 2 years of your 1099s, average them out, and use that as income. So you can write off whatever you want as long as we'll go off of your 1099s. And we'll do, and it's not just saying for realtors, any self-employed borrower who may be a contractor or whatever that's going out and just doing 1099 work, we'll use those, average them out over the past few years and use that as income. We won't even collect the other documentation.
Question.
Yeah.
Would this like the service industry and tips income? Like, is this
As long tips is tricky, as long as it's recorded. Obviously, cash tips we can't do
Sure.
anything about.
Right.
But yeah, that
But
works.
that type of, like, because I'm thinking 1099, business owners or
Yep.
trade. I'm thinking retirees.
Yep.
Think of
Retirees.
it. So like it not as much as like tip-based industry, like gig type, I guess gig type.
Yep. Those freelance
1099.
workers,
Yeah.
those the graphic designers who are going to different companies and just doing 1099 work.
Right.
Those are the types of borrowers who they might receive $100,000 from for a huge job that they did for over 6 months, but now they're done with that company and on to the next. But they do maybe 1 or 2 of those a year, but they don't want to show all that income. They're writing off all their programs and whatever else they're using for their business. So it's not showing that they're making a couple $100,000 a year. Well, we'll use those 1099s and we'll make sure that that income can be used.
Love it. So this concept, again, I'm going to like, I think there's I've come to it a couple times here, but like the way your database is segmented or tagged, right? And to tag it effectively to where you can know who your 1099 business owners are, or your business owners are in general in your database. You can know who is a retiree or coming up on that age to where these types of products may need to be in use. And again, I'm not saying the tactic in the script is, hey, I know you're retired. Sounds like you could use a portfolio loan.
Yeah, it might not be the case.
No, it's just, it's
But it-
out of the
but it
blue
may.
calling somebody with that. That's not what I'm
Right.
saying, but like,
Right.
especially from a marketing standpoint, to get the point across that you're the expert when you're providing information on this is not common knowledge.
No.
If you're providing value that solves a problem for people that is not common knowledge, guess what happens? They contact you.
Yep. Or they'll think of you when they
Correct.
hear someone needing something.
Right.
Yep.
Next tactic. What do you got?
Lastly, cash guarantee. It's a huge thing right now, all over in this Rochester market specifically. But we can do them all over. Ours is a true guarantee in the sense that there's no mortgage contingency, no appraisal contingency, and we will purchase the home if something falls through at the terms of the contract, which is huge. Some other institutions will not. We will. The biggest thing that offsets our program from anyone else is that we only require 5% down. 5% down EMD, 95% loan to value. That's with a credit score of above 700. So think about all the buyers who are struggling in this market who can only come up with 5% down and losing out to all the cash guarantees that require 10 or 20% down and they can't qualify for them at those institutions. We can help out. We have a great process on how. It's a little bit in depth for this conversation, but if anyone has any questions on this, please reach out to me. I'd be happy to go over it more in depth with you. But it's an awesome program. Again, it's a true guarantee, 5% down.
Let me ask you this, what would be, like, how do we run this through a filter on our end to where we should be the ones bringing it up to, a buyer or a potential buyer to say, hey, we really need to talk about, we get you connected with this cash guarantee concept and program.
Because
How do
a
we
lot of people
know,
get
like,
scared about it.
well, how do we just know? Because, like, I guess where I'm thinking of is like,
Mhm.
if they're not going to qualify for it,
Mhm.
we probably
You don't
shouldn't
want to
bring
bring
it
it
up,
up, mention it.
right?
Yeah. You know,
It's a good rule of thumb, I guess.
I've had this conversation with multiple agents. When you are doing your buyer consults and you're at the stage of ready to move it over to the lender at that point, just tell them that they have options, that this lender has options to possibly make you more competitive or will create the best solution for you so that we can get you into a home. Keep it generic. Don't go into too much detail, because when I initially have the conversation with them, I'm going to say the same thing, because I'm not going to promise them that we can do something without looking at their application and documentation first.
Right.
So I'll mention, hey, we've got some products that can help you compete. We've got some low down payment options. We have some something called a cash guarantee. We'll go into that more in depth if it's something you can qualify for, but just pointing them in the right direction of that there will be options and that this lender is going to go over all options best suited for you.
All right, so more so, we should, at least with somebody like you, we should assume that the default setting is that if they can qualify, you're going to bring it up.
100%.
And if you get, as an agent, if you get somebody qualified, make sure you're asking the lender about cash guarantee and not planting the seed with the buyer and having them get all
Yes.
excited and then disappointed if they can't qualify.
Right. Unless it's someone that you've already had pre-approved elsewhere and you're sending them over to us as a second option or whatever it may be.
Yeah.
You already know that that lender's already told you their credit's awesome. They've got cash, or at least enough for a 5% down. They've got, or they're getting a gift of funds, whatever it may be. If you have that, you can start thinking to yourself, this buyer, well, they're not qualifying for this 20% down cash guarantee program, but they may for Drew's at cross country with 5%. Maybe I'll bring that up to them to see if they want to shop around a little bit.
Love it.
On top of that, you can tell them, hey, I think Drew might have this program. Let him run an application. He's only going to do a soft credit check. This isn't going to cost you anything. This isn't going to negatively impact you. There's going to be no trigger warning. So that first person that you're qualified with won't get notified. I don't know if you guys know this. Anytime your buyer's shopping, they get their credit pulled, the other institution gets a warning and a notification that they're shopping other mortgage lenders. We all get it. I wake up to about a few of them every morning. Everyone shops today, but that's just what happens. But that's because when it gets triggered, it's because they're getting a hard credit pull nonstop. When we do our soft, for every pre-approval, we only do soft credit checks. It doesn't issue the trigger warning, so no other lender knows that they're talking with me. It makes them feel more comfortable. It can make you feel more comfortable. If you think you're cheating on your other lender, that's okay. It's not a big deal. They won't know, but it'll make them feel okay to at least get everything ran with us to see if they can qualify for whatever program that may be to make them more competitive.
So what would be the question to ask a lender to confirm it is a soft credit pull, not something that's going to trigger?
I would be straight up with them and say, hey, when you guys do pre-approvals for the buyers I'm sending to you, are you doing hard credit pulls or soft credit checks? And if they're telling you that they're doing hard credit pulls, you're hurting your buyers. Now there's that whole thing of, well, they can shop around for 30 or 45 days and it's going to use the same thing. That's fine, but you're also issuing those trigger leads and warnings, and their info is getting blasted everywhere. They will start getting the robocalls. They're going to start getting calls from Rocket Mortgage, who buys the trigger leads. And they're going to be annoyed by that, and they're going to get upset at that lender who did that hard credit pull and allowed their information to go out everywhere, because that is what happens when you have a hard credit check. So I have tons of buyers that come to me like, I'm so frustrated. I've gotten 13 calls today because I got my credit pulled by this lender. I'm like, well, I won't do that. You're not going to get a hard credit check until you go under contract on the home. And at that point, it doesn't matter.
Learn something today.
Yeah, it's huge,
Love it. So I think that's a tactic, right? Like
huge tactic.
to make sure that, you're advising a buyer to do something, and if you're assuming it is a soft credit pull, make sure the lender that you're getting them with is actually doing that, and not a hard one.
Yeah. And a lot of lenders can do soft credit checks. They're choosing not to. So if they're telling you they can't, well,
Good info.
just know that.
Love it. Let's wrap up and spend some time on the seller side of it.
Yeah.
Go ahead. What do you I think what I would present is the dynamic of like, so you really have, well, I was gonna say you don't have anything to do with the seller, but you do, because if the seller's gonna get their money, it's gonna come from you.
Correct. And one thing that I do on every single deal that I think has won me this year alone, probably about 70% of my business is calling the listing agent when offers are due. If you don't have a lender right now that you refer all your business to that is not calling the listing agent, letting them know that, hey, the buyer's fully pre-approved, we've got full documentation, they're ready to go. What do you need? What does your seller need to close? Do they need a 30-day close? Do they need a 60-day close? Do they need time to move out? How can we be accommodating? When you're asking those questions to the listing agent, and right before offers are due, maybe they're with that seller. Maybe their seller's listening to the phone call and they're thinking to themselves, wow, that lender's on top of it. That buyer is definitely well qualified. I love that. And it doesn't sound like we're going to have any issues. Whether I know the agent or not, I'm 100% calling them, and it just wins transactions. There's a lot of agents at KW that can tell you, who work with me, or others at Cross Country Mortgage, because we all do it, that they've gotten the call saying, the listing agent's letting the buyer's agent know, hey, your offer was accepted. I just want to let you know that it came down to your lender actually calling and making my seller feel more comfortable. It's huge. So make sure that whoever you use, or if maybe they won't do it, or maybe they can't, I don't know, but make sure you have a lender in your back pocket that is going to bat for you when offers are due, because you will get more offers accepted.
Love it. Love it. I think I think everybody on this call knows it's pretty obvious to make sure you're calling the listing agent when you're presenting an offer on your end as the agent. And always surprising that the level of competition that doesn't. So there's an opportunity right there. But now you're like taking that concept and putting it on steroids.
Yeah, we work with a lot of the top teams in the areas and a lot of the top listing agents. And when we have our conversations with them, we want to know what questions they want to hear. What do you guys want to know? Or what do you want us to tell you up front to make you want to accept our offer, or for your sellers to accept our offer? And when they are telling us that, especially on the agent side, that, hey, it was a great offer, but this agent didn't even call me. We have no idea. It was a blind throw in. It doesn't make them feel comfortable. It makes them feel that your buyers really don't care. So not only do we have to call, you guys should be 100% calling every single time as well.
And I think, you tell me what you feel about this, but as a listing agent, feel free to take that step too, right? Like call, hey,
Okay.
the buyer I'm considering here, you're the one on it. Tell me about him.
Yep.
Any
Yeah.
problem with that on your end?
No, it happens.
Yeah.
Sometimes I call and they miss it, and then they'll call me back. They say, I was going to call you anyways. I get that all the time.
Yeah. So be tactical on the buyer and the seller side when you get to that point of actually making an offer. Concept is have a partner that's willing to do this for you, and sees the value and it's part of their routine. Don't get me wrong, you can work on things together to get to a point, but have that dynamic in play for your business and then utilize it and take it a step further. You do it even if you're not getting these calls as a listing agent, like it's a service to your seller to be able to, and a value to your seller to be able to say, I spoke with the lender of the offer that we're choosing here, and I got a really good vibe, and I feel really confident, and you know, that's all coming from them. It's a different level of experience compared to just, yeah, we got to kind of wait for a month to see if this all sticks. But yeah, I've heard of the bank before. I think we'll be all right.
Yeah.
Love it. Drew,
Any
thanks for your
question-
time
any
today.
que-
This was
Yeah.
amazing.
No problem.
Hope everybody took something away with it. We went the full hour here. So, I mean, if anybody's got a 60-second question and answer, fire away.
Yeah. And if you don't want to ask here, feel free to contact me. You search Andrew Fienberg Cross Country Mortgage. My website comes right up. Contact information's on there. My cell phone's the easiest way to get a hold of me. Feel free to reach out. Be happy to talk with anyone.
Love it.
Yeah.
All right, y'all. Happy Friday. Enjoy
Awesome.
the weekend. Take care. Thanks, Drew.
Have a good one.
Appreciate you.
Yeah, thank you guys. Have a good one.